Good. Well, good morning and welcome everyone to, I think, the first Push event of this kind. First of all, for those of you who are online, Push is a small fund that we've created specifically to invest in tech in Africa. And our purpose for that fund is not just to invest in tech, but to try and add value to any investments that we make. With that in mind, we thought one of the value adds that we can do is actually have events like this, where some of you can meet some of the interesting people that we know. So first of all, Ananth, welcome.
Thank you.
Ananth is here actually on a family holiday, but we dragged him. And the best part is he's had 10 wonderful days. We're his last kind of gig, so we've got to make it good for him. Ananth, as you know, has had 3 unicorns, which is unusual. Okay, the very last one is the fastest one. Okay, so I don't want to steal his thunder, but really this morning is a casual conversation for all of us to get to know his story. We need to get him to understand Africa.
Yep.
It's his first time here.
Very excited.
We need to understand from some of you your journeys and how we could try and relate their journeys to your journey.
Yep.
And then more importantly, just have some fun and good conversation, okay? And before I hand over to Ben, just a word of a little bit of introduction on us as Push founders. I'm Hasit, CEO of Ramco Group. Ben here is, well, he's migrated here, what, 3 years ago? 5 years ago. And has joined us. He's the lead kind of fund manager. He plays a more active role on a day-to-day basis. I've got Sanjeev there, my brother-in-law, who's based in Bangalore. And the 4th partner is probably online right now, and he's Ush Patel. He's based in San Francisco and in the US. So with that, maybe Ben, you want to...
Yes, thank you very much, Hasit, and welcome everyone. We're excited to have this event today with you, Ananth, and with all of you in the crowd. And to give you an insight into who we have in the crowd as well, we have our founders that come from areas such as clean tech, health tech, shared office spaces, such as the one we're in right now, in insurtech and fintech as well. And we think it'd be great if our founders could briefly just tell us briefly who they are, what their company name is, when they started the company, maybe in one sentence what the company does, and then maybe one of the biggest challenges as well that they've been facing so far. So if we could start maybe with our co-host, in a way, Michael.
Great, yeah, no problems. We need microphones, we're not for okay. We'll just speak about this. Yeah. Do you want the mic? Do you want mics for the questions? Or? Okay. Is this one here work? Okay, great. Hi everyone. Hi, welcome to Kafisi. I'm Michael Aldridge, I'm founder of Kafisi, which we're all sitting in today. And we're a shared workspace provider, but we specifically focus on what's called enterprise solutions. So we look after larger companies with bigger desk requirement, more of an outsourcing provider, I suppose, than an actual sort of pure play co-working business. We set up Kafisi 3 years ago. But we were operating prior to that. But as Kafisi, we've been going for 3 years. We operate now in 3 countries, 6 centres, over 200,000 square feet. I think our biggest problem, which sounds like this is a salesman in me, but our biggest problem is getting more spaces open because there's so much demand. But I think that's the challenge now is to how to scale. So I'm very excited to hear your story about how you scaled things. But welcome everybody.
Hi everyone. Can you hear me or? Oh, okay, got it. Okay, my name is Caitlin. I am the founder of Flare, or we're known in the market as Rescue.co, and we provide emergency services. So 2/3 of the world, 95% of Africa live in a place where you cannot punch the numbers 911 and expect that an ambulance will arrive in minutes. It oftentimes arrives in hours. And so we provide that service. We are Kenya's largest provider of emergency services, process about 10,000 emergencies calls a month. So quite significant. And I started the company in 2016, and I would say one of the biggest challenges is just reconciling with the VC market, which is grow at all costs. And we are a healthcare, and as you imagine, we are one of the most sensitive healthcare services of providing emergency services. And so we do not follow the mantra of, fake it until you make it. We make it and then we grow. And so just kind of reconciling the kind of appetite for investors who want to see growth at all costs, but we're not willing to do that.
Coco, there we go. There you go, Nick.
Hi there, I'm Nick Stokes. I'm the CFO and one of the co-founders of Coco Networks. Coco is we have different names for it. It's effectively a clean tech company that has mainstreamed ethanol as an alternative to charcoal and kerosene and low-level LPG gas here in Kenya in partnership with a major oil co. We have a team of around 1,800 people, half of them roughly in India, where we also manufacture some of our equipment and have our software hub. Greatest challenge, since we're not dealing with software only, in many ways was to survive the pandemic when everything shut down. We had just started a very major deal and started with said Oilco, had lined everything up. And then ports shut, airports shut, team had to stay home, customers couldn't go out, etc. So basically dealing with supply chain challenges that typical, software tech, real sort of e-commerce businesses don't have. Having gone through that, I'm not saying everything is easy, but it feels easier than facing effective shutdown of your business for several months. But thanks to our investors at the time and new ones that have come in, we are in a good spot. We are close to 800,000 customers now in Kenya, and looking forward to this year, where we're going to expand in hopefully 2 other markets in the region. Okay.
Good morning. My name is Brian from Turaco, Kenya, representing my co-founder and CEO of Turaco, Ted, who's in the US currently. So Turaco is an tech-first insurance intermediary, and the services that we offer are inclusive solutions to unserved and underserved markets. So we are able to curate insurance products meeting the bespoke needs of the various partners that we work with. So we work through a B2B2C model, so business to business to consumer. Very happy to meet a number of our partners in the room today, and really great pleasure to sit in the room with founders and potential partners as well. And also we are in Kenya, Uganda, and Nigeria, and hoping to expand into new markets with the strength of our investors in the room as well. Thank you so much.
Good morning. My name is Buckley. I'm founder, CEO of FinAccess. We're building what would largely call the operating system for cooperatives in Africa. These are collectives around savings, or they can be around produce. We started the business in 2018. Have about 400 clients. We are B2B service, serving about 1.3 million end users currently. Predominantly Kenya and Uganda are our markets, looking to get into Nigeria this quarter. The biggest challenge we have currently is onboarding at scale. And this is because a lot of the customers that we're getting, we are the first. These are legacy system, and we are the first digitizing partner they're interacting with. So trying to get a lot of things from super manual, getting them from manual to Excel, and then pushing that data to ourselves, and that's a big challenge. These are people who are not in towns, the people you have to go and look for in the villages. That's the biggest challenge you have. I'm happy to be here.
So thank you, everyone. I think this was helpful for you, Ananth, to get an idea of who you're talking to today. The reason why we wanted all of you to meet Ananth is because Ananth has built and successfully exited 2 companies, Myntra and MetLife, and only recently he also started his 3rd venture, Mensabrands, which became India's fastest unicorn. With that being said, Ananth, I think it would be great if you tell us today something about yourself and your journey.
Firstly, by the way, thanks for having me. I think this is an unexpected highlight of the right? I actually, when Sanj and I first spoke about it, I think it was great, and it's great to meet a set of, and it's interesting to see an ecosystem evolve, very different from what I'm used to. So I'll tell you a little bit about just my journey, but most importantly, I'd love to make this as interactive as possible so it's actually helpful in some way. So I actually started life as a consultant. So I spent about 15 years at McKinsey, in the US primarily, but I lived in China for about 3 years and then moved back to India to start the McKinsey office. And all through, I did automotive product development, supply chain work, nothing to do with tech or consumer, which I later got into. I make a lot of my decisions based on people. And so I actually met the founders of Flipkart, who are the largest e-commerce company in India. It got sold to Walmart at an event like this, and just started chatting with them and really liked them. And they were both 32, 33 at that time, and they said they wanted to transform Indian retail. And I thought it was interesting. A year after I met them, they bought this company called Myntra, which is a fashion e-commerce business, which is part of Flipkart. And they wanted to run the business separately from Flipkart. So looking for a CEO. I had done automotive operations product development work, and this was in fashion e-commerce. So felt a little different, but I felt, why not? The reason to do this, by the way, is I'm a big believer in the where to play. Picking markets that are profitable and large you work very hard anyway. So you might as well pick areas where you can actually have outcomes which are outsized. So fashion e-commerce was the largest part of e-commerce in India, and it was the only one with 70% gross margin, so you could make money. So I felt like it was an interesting bet to take. So joined in 2014 end, 2015 into Myntra as the CEO. Sort of the business was at that time, call it $150, $175 million in revenue. And it was losing a lot of money. We'll talk a little bit about cash burn and so on. It was a negative 30+% EBITDA business when I started. When I left, we basically got to a little over $1 billion in revenue, and we were at break even. So we went from negative 30-some% EBITDA to break even. And a lot of it was about building brands and how do you sort of run a large scale tech business profitably. And now, of course, profits have come back into fashion, but at that time it was growth. You were talking about growth. We had SoftBank as an investor. I think we had every major investor at that point of time. We eventually sold that business along with Flipkart to Walmart. It was the largest sale in India, I think, till date. So we sold it for almost $21 billion to Walmart. And that was a good sort of way to sort of house the business, because Walmart wanted to win against Amazon in India, and we were the largest sort of player, and so they bought us. But it was very interesting building that business because it was my first exposure to tech in a serious way. And we built fashion tech in a very interesting manner. The biggest problem in fashion is predicting fashion. And actually we used a lot of AI and machine learning to say what color will sell next season, so the waste comes down. Which is why, by the way, a lot of profitability happens because you have less waste in the system and so on. So did that. Post that exit, I thought, it was a reasonable financial exit and so on, so I thought I'd become an entrepreneur. So I took the exit, and I'd done 15 years at McKinsey. I was a professional CEO, and I decided that now's the time to bet the farm, which is probably a very bad idea in hindsight, right? So I took all of the exit, and I invested into a small healthcare company, and I bought 10% of that healthcare company. It was a company called MedLife. And for many of you, as you do early stage and you're thinking about investors and investor money, so I put in money, and just to put life in perspective, Flipkart had raised, call it $4 billion in the time that I was there, right? In the 4 years, $4 billion, a lot of money, right? MedLife was a small business. It was roughly doing $15 million of revenue a month, and was losing about $4 or $5 million a month, right? So I said, what's the problem? We'll do MedLife. I'll raise a few $100 million, and we'll be off to the races. So I put in the money. Very different experience when your own money gets burnt, right? My money got burnt in the first 3 months, right? Which is and there was no fundraise in sight. And then, if you guys remember, that this was in 2018. And WeWork incident happened at that point. So WeWork sort of fell from a 45 billion to a 4 billion sort of valuation at that point. All funding for, and then right after that, COVID hit us. So we went from an era of growth, and no problem with funding, to everything being frozen. So essentially, in 6 months, we had to sort of take a $5 million a month burn business to almost nothing because we ran out of money, right? People sort of think about unicorns, they think about the successes. Startups are just hard, right? They're really hard to do, and they're really hard to make successful. We got very lucky. I think one of my, may not be the most inspiring thing, but one of the things you learn in life is, I think whenever you get good luck, it matters a lot more than execution and everything else. So when you get luck, take it. So, for us, COVID was a tailwind. What happened is suddenly online sales of medicines and online diagnostic tests went through the roof. So we were basically able to grow at about 200% year on year and cut our cash burn from 5 million to nothing, right? And that wouldn't have happened otherwise because it was a competitive market. Given all that was going on, I had 2 companies, that were vying to sort of consolidate, and there were 4 companies in India at that point. And in general, in markets, you need a clear market leader. In general, number 1 and number 2 player is the right answer. If you have 4, it's too many. If you have 1, it's probably not the right market because there's not enough competition. It's not a large enough market. So we decided we'd consolidate, and we sold to the number 1 player at that point. So we sold for a few $100 million. So it turned out to be a good exit. And the reason I bring this up is sometimes, as founders, you get very attached to the startup. Knowing when to sell is equally important in a startup's journey because, both in Flipkart and in MedLife, if we had not sold at the time when we sold, it would be impossible for the companies to be where they are, right? For Flipkart, you needed a home like Walmart. For MedLife, you needed a home like Pharmacy. So we sold the business. Post that, I was wondering whether I should become an investor or continue to be an operator. I felt like I was more an operator than an investor, so I decided that I would start Mensa. So Mensa is it's now 20 months old. We basically build and scale fashion, beauty, and home brands that sell primarily online in India. We have 23 brands now. In 18 months, we've bought 23 brands. There are lots of Indian e-commerce is quite large. Just to give you perspective, there are about 200 million sort of active customers who buy every year. That number is growing. So felt again like there was a big opportunity over the next 10, 15 years to build out brands, but from India for the globe, right? Because India is a manufacturing hub and so on. So started this. One thing, it's great. We've raised a total of about $300 million. I've invested as well, but more than unicorn and all that, what I'm really excited and very proud about in terms of Mensa is in 20 months, we're call it 200 million in revenue, but we're 2% positive EBITDA. We're still growing at 50% year on year. And we have 23 great brands, out of which 6 brands are becoming more household names in India. So we have a brand in fashion, we have a brand in beauty, we have a brand in gardening. We have like interesting set of brands that are growing and scaling. We have about 1,000 people now in total. We have primarily in India, but we also sell in the Middle East. We sell in the US. And now that I'm so excited about Kenya, maybe we'll start selling a little bit in Kenya too. But it's been an interesting journey because I started my life as a consultant. I went into being a professional CEO, then took a little bit of risk and became what I would call part entrepreneur, part owner. And now this has been sort of a complete entrepreneurship journey. This Mensa, I think it's early, but ideally we'd love to, because it's an economically sustainable model, we make money, right? The need for external capital and the dependence on capital markets is quite low. You can raise money when you want to, not when you need it. Once you need the money, it's difficult. Then when, so it's just, you don't have to time the market. You can do whatever you want. We'd ideally like to IPO the company. We'd like to take our brands global. We'd like to sell in very many different places. So that's a little bit of my personal story, just in terms of what's been. There's been lots of ups and downs. I think, of course, it's nice to have unicorns and exits, but I think the big thing is to enjoy the journey because the time never comes back. So I think as you build the business, it's important to sort of think about enjoying the journey and building something that I think is exciting and enjoying the day-to-day, because I think success is a little bit dependent on luck. Not little, reasonably dependent on luck in terms of the outcome, but building a great business that you enjoy building is completely up to you, right? And I think doing that, I think, is really the joy of it. That's the journey. I think just maybe if I think about what might be helpful, maybe just a couple of framing things on India itself and the India e-commerce journey. Because I think there are, not India e-commerce journey, India tech journey. I think there are lots of parallels. So India e-commerce and India tech did not really take off till 2010, right? So 2010, there were almost no startups, right? From 2010 to 2012, there are probably 1,000+ startups that started, right? 2015, 16 was the little bit of the froth, right? I mean, everybody sort of, and then it crashed. And then a lot of startups went out. But, a lot of startups also created sustainable businesses, right? I mean, we've had now multiple people go IPO, and, at the last count, there were 100+ unicorns in India. Even assuming their valuations are half, there are 50+. Which have become, and it's been quite interesting because there's always an inflection point. We were talking in the car earlier, and today the GDP is $1,800 in Nigeria, right? I mean, sorry, in Kenya at 1,800, and Nigeria is a little higher, right? And South Africa is a little higher. I think at some inflection points, consumer demand starts to take off and startups start to take off. So I think you have to sort of, that happens and it happens. You don't predict it exactly, but then the businesses really start to take off. And at least I saw that happen in the 2015 to 2020 in India. So that's one. The second is a lot of Indian startups, and I know you have some insurtech, some health tech, some SaaS businesses. Many companies in India also don't just build for the domestic market, they build for the world. And then I think when your domestic market is a little small, you can start to build something which is quite interesting and at scale globally, right? So I think maybe those are two things to frame, right? Which is, one, you can never predict the inflection point. You keep building, and suddenly things take off. And second is, depending on the market size that you're playing at, it's important to sort of say, I will build for a large market, even if the domestic market is small, right, or relatively smaller. So I think those are two things maybe I wanted to leave you with, and hopefully we can make it interactive, and I can answer questions, and we can have it more of a discussion, because frankly, I don't know too much about the ecosystem here, so I think it's more a dialogue and a discussion.
Yeah, and Ananth, I think the first thing you mentioned is how you spotted the exact point that you wanted to enter, what kind of a market it is, what margins there are,
Yep.
all of that. I think it'll be helpful if we start there.
Yep.
Right? And just think, because, and I'm sure the audience here also, when we were talking of numbers, we were thinking Kenya, and the numbers are not as big in terms of people, 200 million users, for example, right? So I think that part for all of us here is
Yep.
very important to understand,
Yep.
because we don't have the luxury of hitting a market half-heartedly and get away because of the volume, right? So,
Yep.
so what are your thoughts on
Yeah.
on that?
No, so I think the most important thing in startups, the most important thing is unit economics, right? And unit economics is for every transaction, for every deal that you do you make or not make money, right? And that's a function of a few different things. In general, it's a function of two big things. One, what is the gross margin, which is the selling price minus the cost of goods sold? What is the gross margin of the product? And the second is, how expensive is it to acquire and retain a customer? Both acquire and retain, both are important. So these are the two sort of things that actually matter. So I have always sort of believed that unless you play in businesses where you can actually make money, there's no joy in building a startup, right? I mean, this source of endless capital for you to burn, for every dollar of revenue to burn $3 of capital doesn't work. And I think anyway the markets have also turned, but even if they weren't, I still think it's a terrible business, right? So the big thing I look for is gross margins in a business. And is there a way to really reduce your cost of customer acquisition because you have a great product? The single best cost of customer acquisition is zero, which is people love your product and they talk about it. I mean, it seems again very basic,
Yeah.
right? But every time you pay Google, Insta, Facebook money, right? It's push. I think it's fine to start with push, but I think in a year, if you can't actually have 30 to 50% of your customers be organic or repeat, then it's a tough business to be. I mean, this is a little bit more consumer, but I think it applies, by the way, to everything, right? If you think about a SaaS business, the question is, what is the natural retention in the business? What's the churn in the business, right? If you think about consumer, of course, it's CAC. If you think about healthcare, what are your NPS scores or what are your consumer experience scores? And do people sort of keep coming back, right? Whether it's, whatever service that you do, what is the quality of the consumer experience? So gross margins, CAC, and repeat, I think are the three things that actually matter in making a business successful. Yeah. And so I think you should be very picky about it. I think if you pick the wrong one, however hard you work, it's very difficult, I think, in order to overcome structural difficulties, right?
I think another question that might be interesting to hear your perspective on is, we spoke about market size earlier, and we all know India is very big. And here in Africa, obviously, we have like several smaller markets as well. And when it comes to expanding now, how would you go about it? What advice would you give our founders, for example, if they want to scale out of Kenya? How do they pick the right market? Yeah. So, it's a broad question, so let me try and answer it in a couple of ways. I spent a week when I was in Myntra in Israel, and Israel is a very small domestic market, but it's built multiple billion-dollar businesses, profitable, at scale, right, all of that. And there it's been interesting. Because the domestic market is smaller, they made a conscious call that every product that you build is always built for the globe, right? So then the market size becomes much larger very, very quickly. So that's one thing that I would say, at least worth thinking about, right? So Indian states used to be a little bit, before GST got introduced a couple of years ago, it was almost impossible to do business across states, right? You needed... Except alcohol. Sorry? Except alcohol. Yeah, exactly. So, except alcohol. So, now it's changed in India, so it's one market because of GST. But before that, it was very complicated. And therefore, you had to pick, essentially, 7 to 8 cities. So one thing that people do is, I think countries are almost meaningless, depending on how you think about it. So that if you can reduce the unit down to what are, so I just so that you know, while India seems very large, okay, there are 26,000 pin codes in India, more or less. 4,000 pin codes make up 85% of the e-commerce market in India, right? So when I was running Myntra or even MedLife, you would focus on the pin codes that matter. So the question I would have for here is not maybe countries, but are there 10 cities that matter? And within the 10 cities, are there X pin codes or zip codes that matter? Again, I don't know, but in Africa, is there a way to sort of micro this problem as opposed to thinking about countries and countrywide expansion and countrywide scale? Because then it simplifies the problem. I think the third thing I would answer is, if you want to build global products, go after the largest market. And it's so Indian software companies sort of don't pick Southeast Asia, they pick the US because it's the largest, deepest market, right? It's the hardest one to crack because it's a very high bar, but then you might as well go after the largest market because the effort is going to be the same. And putting all that effort in to crack Indonesia or maybe much easier to go after the US. So again, if you're going to go global, go after the largest market, even if it's the hardest one to do. Thank you. And I think one question that you've hinted at a few times, that you don't know so much about the African ecosystem.
Yeah.
I think we would just be interested to hear, what have you heard or what do you know about it prior to coming to Kenya?
Yeah, so, one is, there is a little bit, we were chatting about this earlier. There's a bit of a perception thing, right? If you remove the curtains, what you see of Nairobi is not what you expect before you come here, right? And I think that's important, especially from a global investor perspective, right? Because global investors are looking for, obviously, by the way, the first one, of course, is market and market size. But the second, I think, is infrastructure, quality of talent, right? Quality of founders, and reliability, right? And if you can sort of prove some of those things, I think then that starts to really help for the global capital flows to happen, right? Because you do need global capital flows as you think about large businesses that need to get built. I think that's one. Second is, I think you guys are going through an interesting inflection point. We were talking about the cost of data, right? And that's starting to come down, I think. But if it can come down even more, you will suddenly see an explosion of commerce happen, right? Because, I was just saying, it was quite interesting for me. The driver sort of turns off the data and turns on the data regularly. This incidentally used to happen 15 years ago or even 10 years ago in India, right? All the time. And that's gone because Reliance Jio sort of reduced the cost of data in India dramatically. We have the lowest cost of data. And I think this will start to happen here. And I think that could be quite interesting because you then suddenly have lots of businesses that can be built on top of data, as opposed to just mobile users, right? So I think that's the other thing. The third is, this is such a nice place to live. I think the interesting thing for me is, can you attract global talent? I mean, I know a lot of MNCs do, but can the local companies attract great tech talent, right? I mean, to give you guys perspective, we have about 25, 27 people in Abu Dhabi, which, it's not a particular, but they're really trying to attract tech talent, right? And providing a lot of incentives and getting people to come down. So could you create a nucleus of interesting tech talent? Because you can start to build out some interesting, then deep tech companies for which the world is the market. No.
And perhaps the converse of that question is also true, because while this ecosystem is lacking, and I know a lot of us in our conversations, some of the basics are lacking, right? Whether it's talent on how to, host our information or how to scale, and we were speaking about this in the car earlier, is what can we outsource? How do you find the Indian ecosystem as a way of providing services to us here? And do you think it's cost competitive? And is that one area that, some of us could look at? Because we're trying to build sometimes talent here at a cost which is very high.
Yeah.
Right? And as Kenya is a great place to stay, it's still not attractive enough to have big talent come in.
No, so I think there's a big opportunity. I think if you think about, I'll again talk about consumer and SaaS maybe differently, but consumer businesses, the biggest thing is performance marketing, right, at some level. If you think about performance marketing, if you think about creative design services, I think there's a huge opportunity from India to here, because I think India just has built out a lot of capacity because of just e-commerce in India, and I think there's a real opportunity, and it's English speaking, and can do work anywhere, right? So for all our US businesses, we actually have our teams from India actually do it. So I think that could be one interesting thing. Sure. I think AI, machine learning, data science is another area where I think there's lots and lots of engineers that are getting sort of produced and graduate every year, who again, I think you can set up engineering teams very quickly. I mean, you've set up a team in India, I think, right? In Pune, you were saying on tech. So I think it's important to sort of say, can you create engineering centers that can actually do real engineering work? Because you have a lot of engineers that graduate, and it's very cost competitive to do it. I think those would be two off-the-cuff areas that I think would be quite interesting.
We have 50-50 here and in India. We have Indian team members rotating for a year or two, and the other way as well.
Yeah. And
No, so thanks. We don't want to hog the conversation. No. Are there any questions from the floor?
Yeah.
I mean, how's your experience right now when we read about India and example of Reliance with so much capital also going into the same sector?
Yeah.
How does that competition look like, feel like?
And
do you see them as ecosystem builders, or do you see them as eventual buyers? I mean, I'm just trying to see how you frame it.
Yeah, I think it's a little bit of all three. I think the biggest is actually ecosystem builders. So the business we're in is building brands. So fashion, beauty, and home is a $120 billion market in India. 80% of that is unorganized, which is you go to your mom and pop shop, most people still get their clothes stitched, right? So there's a real opportunity to build brands. So the more people that come in and build brands, the better it is, because people actually shift from unbranded to branded. So to that extent, it's an ecosystem play. I think Reliance has been a good, I don't know whether it's a good exit, but it's been an exit for many people. I think, in terms of, so that could also be a case. But for me, the biggest thing that Reliance and people like Reliance, Airtel, others have done is they've built out the mobile ecosystem on which all our businesses are built. If you didn't have Jio, if you didn't have the logistics infrastructure that that's not Reliance, but many others have built, it would be impossible to build the businesses we're building today. So the base infrastructure has been built by them, and we're all building businesses on top of it.
I've got so many questions now. Going with my original question, I want to make it like two parts.
Yeah.
So as an entrepreneur, as you're building a business, when you wake up in the morning, there's hundreds of things that you can worry yourself with, and we all try and focus on the top three, say, in a day.
Yeah.
I'm interested to know what it is that if it's possible to answer that question, what's your sort of 80-20, what have you focused on to be able to drive scale? But can I ask you to answer that in two ways? One is like how you've done it in a highly capitalised environment, and what you would say to do in a lower capitalised environment, which is what really, to me, is one of the big differences between say, India and the African continent and the countries, is that access to capital here is, I believe, more difficult.
Sure.
So what do you focus on to? What do we have to get up in the morning and think about first?
Yeah. So since you asked me in two parts, I'll answer it in three. Let me answer the less capitalized version of it. I think the biggest thing I worry about is what are my unit economics, and are my brands starting to make money in the right way and growing in the right way? So I spend a lot of time thinking about it. What do I mean by that? Is my cost of customer acquisition going down? Is my retention going up? Are my consumer experience metrics going up? I spend a lot of time on the core of each of my brands to say, what is it that I do, right? I mean, do they make money now? How much working capital do they consume? Because most people look at a P&L and not a balance sheet. It's important to look at both. So I look at that all the time just to make sure that that's 30%. 30% I think is on people and talent. How do I get the right people motivated and into Mensa? By the way, the most talented people don't do it always for the money, right? It's not just for the 10%, 20% hike in salary. They do it because they believe they're part of a mission, they're building something. So how do I create a network of people that I can go look for? So the best talent, whether it's engineering, brand, performance marketing, come to us. So I spend a lot of time on people, both externally coming in and then people inside Mensa. How do we ensure that they grow and scale and so on, right? That's the other third. And the last third is like everyone else who runs a business, firefighting. Something or the other goes wrong, right? I mean, in that way, I think there are lots of similarities, right? In, a warehouse of ours, by the way, the factory inspector will show up and, you'll have to sort of figure out how to manage it. So there's a third of it is firefighting, right? So that's one part of answering the question. In the very capitalized view of the world, I think, you were talking about grow at all costs. And how do you manage that? I think, I've been through phases of this, right? So in my Myntra phase, we were growing at 150%, right? And it's a large business. It's a $500 million business growing at 150%. And I remember having a meeting with SoftBank, with both Masa and Rajiv Mishra, because we were in the middle of fundraise, and he was saying, and I was very proud of the fact that we had a minus 37% EBITDA that came down to minus 14, that was heading down to 0, right? And he was saying, why are you burning so less? Why don't you actually grow the business? What is this 150%? Why don't you grow 10x, right? And then we'll figure it out. And I think, it was taking the wind out of my sails because I was like very excited and, like profit. I think that's changed in general because I think the capital markets have spoken. So I think that problem will not happen for the next 5 years because credit markets have tightened and, interest rates are up and so on. But even if they do, I would say one thing to ask yourself is your consumer experience holding up? So the biggest factor in Myntra's scale up was actually inventory and logistics. It had nothing to do with demand because there's so much demand in India, right? But it was inventory and logistics. Could you keep consumer experience? So when you go from 150,000 deliveries a day to 1.5 million deliveries a day, can you keep your service levels? And it's a non-trivial thing. So one of the things at least I've done over the last, I think with MedLife, which is much more critical for quality. I mean, delivering the wrong shoe is not fatal, but sending the wrong test results could be. Right? So in both these though, I think making sure that consumer experience was always paramount in scale is the way I've sort of balanced that out, right? And the third part answer to your question is, if I look at my day, I manage energy, not time. And I think they're two very different things to do. Some things, I think for each of us, different things give us energy. Some people like problem solving, some people like people, some people like consumer reviews, whatever it is, right? So I've sort of figured out what is it that gives me energy, and I do more of that. And the things that don't give me energy, I try and do less of it. It's hard to sort of identify, but if you actually do it, then the length of the day is almost immaterial, right? You feel like it. So, anyway.
Great answer. Thank you very much.
Yep.
Just a question.
I know you've sort of spoken about it in pockets here and there. When you started off Mensabrands, and I'm now trying to draw a parallel with e-commerce in this part of the world. Now, if I look at whether you're looking at your bigger players, your bigger consumer brands, etc., brick and mortar guys, the market exists. I'm looking at Kenya. The market exists. And one of the challenges that has always been faced, especially in this part of the world, and that's why I want to understand where sort of your 3 or 4 nuggets, is the growth of e-commerce in your India or in India part of the world has been exponential. And it took a while, but it's exponential. So if you look at the market split between e-commerce and brick and mortar, then you'll find it's really tilted towards e-commerce. But on the flip side, in this part of the world, you're getting e-commerce, which I used to work. Now you're still seeing those little blips. And I just want to understand, what is it that we're not getting right? And what is it that in a 6-month period, if I got it correct, getting into a unicorn within a 6-month period, what is it that you did different? Because even in India, you also had competitors who were also in e-commerce.
Yes.
So it's not an issue of, you enter into a market and everybody wanted your goods and you grew.
No, yeah, sure.
What is it that your sense that if you do 1 or 2, 3 things right, then you can be able to get that exponential?
Yeah. So, just to give you perspective, so e-commerce in India is about 8% of overall retail. So just to put life in perspective, it's about 17-18% in the US and about 27% in China. So relatively, so it's, therefore, by the way, my sense is the right water level is between 10 and 20%, right? Because I think most countries, even in the long term, will always have offline as the primary mechanism. So I think when we decided to start Mensa, it wasn't online versus offline. It was basically unbranded to branded. That was sort of the insight. And the second insight is a little bit more to your question, which is, what does it take to scale up a brand, right? So firstly, it's really, really, really hard, right? There's no easy answer to why sometimes brands scale versus not. But there are 2 or 3 sort of things that sort of play out. The first is brands need to have purpose and meaning. It can be something, but it has to appeal to a customer beyond the functionality of the product. Because otherwise you're just selling a shirt, not a story, right? So brands need to connect to consumers, especially in India with the Gen Z consumer. You need a little bit more of a story and you need a purpose for the brand. It can be anything, but it has to be a purpose, right? So for example, we have a very nice sari brand called Karagiri, which we were talking about earlier. And there, by the way, we work with 2,700 weavers directly and get the weavers' products into India, into various consumers. And we're creating an access for them, right? The market didn't exist for them, and then globally and so on. So you need purpose for the brand. And I think being sharp about the purpose is important. The second is what I would call value proposition, which is price to quality equation. It doesn't mean you need the best quality everywhere, but for the price, are you providing a great amount of value, right? So we have both ends of the spectrum in our brands. We have a value brand, which is Dennis Lingo, which is our, you sell shirts for, call it 800 rupees, so $10, right, in India. But, there you make sure that the fit and the quality are great for those $10, right? And we still make 10-15% EBITDA on those businesses. So, but you need to get the consumer value proposition right for the consumer segment, right? So the price to the value that you're giving consumers, making sure that you're giving more value than the price is important, right? So that's the second thing. The third is, I think, scale up requires processes to scale. to get into the next level of depth to understand what your distribution channels are and figure out how to growth hack your distribution channels, right? So all these 3-4 things help with scale up. I don't think it's an easy one sort of answer. Sorry. Right? And my belief, and it's sort of proven itself out, is if you do the right thing for the first two, generally you'll do okay. Because people are also, fair, and, most people will take care of it, right? So the reason to sell MedLife was very simple. We had 4 players, all of who were offering similar services, all of who were roughly similar in size, 10% delta between them. It was an unviable market structure, right? Therefore, I think consolidation was the right answer, right, for the company, right? When we sold at that point, I didn't know whether it was the right thing for me personally because, frankly, I was out of a job after doing this, right? So, but I felt like it was the right thing to do, and therefore we negotiated a good deal, but we did it because it was the right thing from an industry structure for the company. I think that's one mindset, which is what's the right thing for the company to do. The second reason I think to sell is, in the case of Flipkart, you've had investors who've been with you for 10 years, 11 years, who haven't seen a financial exit, right? And the business is not in a shape to IPO. It can't go to public markets and raise money. Therefore, a strategic sale becomes important, right? Because, Tiger Global was the largest investor in us at that point of time. And they had sort of, in their fund, they'd been 11 years. I mean, if Flipkart had sort of not done well, it would have actually impacted at the Tiger Global level, right? So it was important to sort of exit and find the right home and find the right deep pockets because it was a business that was still continuing to burn cash after 11, 12 years. Therefore, you needed somebody who could fund it and sort of take another 10-year perspective. And therefore, that was the right reason to sell. And then, look, there are lots of angel investments that I do where, you have to sell because you run out of money. But that's the worst way to sell, right, in some ways, because you don't get the price for it. But I would say these are the 3. So put the company and the structure first. Second, put the investors. And third is yourself. Because yourself you can solve in a different way, right? Because, if you're tired and it's been a long time, which, by the way, happens to many founders, right, then you can find professional management. You can do many different things. But the reason to sell a company, I think, should be for the first 2 reasons.
Any tips on fundraising?
Market and where you see it going? Yeah. So firstly, by the way, profit is king now. So all investors, by the way, look for, the somewhat good investors look for EBITDA. The great investors look for now discounted cash flows, right? So I think, you've swung the pendulum maybe a little bit too much. It'll come back. But I think the chances of raising, if you're a profitable business, are 10x greater. So if you are a cash burn business, reduce your cash burn, right? If you are unit economics negative, make sure your unit economics positive. And of course, if you have the first 2, make sure that you start to make money. So you're less capital markets dependent. I think that's one tip, right? Just because I think investors are now valuing profits and future cash flows a little bit differently than what they were before. I think that's one. The second is the best time to raise money is when you don't need it. The reason Mensa, I didn't need the money, right? Because the companies were profitable and there were lots of investors asking. So then it's much easier to sort of negotiate the terms that you want. So raise money when you don't need it, not when you need it. So if you think you're going to need money 2 years from now, raise now or when there's enough interest. Third is investor relationships are a relationship like anything else. Get to know investors when you don't need money. Don't get to know them when you need money, right? Just to give you perspective, Axel was the first investor in Mensa. And I've known Subrata for 10 years, right? He was in Flipkart and, Norwest invested. By the way, I didn't have a pitch deck. There was no document, right? We sat across the table and agreed on a valuation and the amount of money that they would put in. The first 3 rounds, still our last round, which we got valued at a little over $1 billion, The first 3 rounds, there were no documents. There were no PowerPoint presentations. We just had conversations because they knew the business and people put in money. And that's how actually the reality works, right? I think people spend so much time on their pitch deck. Not that I think you should have a bad pitch deck, but I'm saying the bigger value is actually in getting to know the investors and them getting to know your business. And do it when you don't need it. So if you're not fundraising, you should be meeting an investor or 2 every month. Yep.
So you've talked a lot about unit economics and also really looking at markets and having good gross margins. When you compare some of the challenges that you face, especially in Africa,
yep.
especially from a logistics perspective, the cost of actually doing deliveries, right, the last mile, as a brand, I mean, as a brand owner that started in multiple businesses, would you typically advise businesses to really look at the supply chain and invest in distribution themselves, or have you found outsourcing has been a better solution for this sort of thing to get your unit economics?
So, hard for me to comment because I don't know the nature of the logistics infrastructure. In India, I think 2 things have helped. One is, by the way, the rails of infrastructure and logistics have been laid by Amazon, Flipkart. And then there are independent logistics companies like Delivery, which went public and so on, right? So the infrastructure exists. So for example, for Mensa, we have our own warehouses, of course, but we don't invest in the last mile delivery because, there are now enough companies on a per unit basis that's quite competitive. I don't know what the state of the ecosystem here is, right? If the state of the ecosystem is bad, in terms of the cost of logistics being high, I would say be very sharp about where you want to serve your customers. Pick 4 pin codes in Nairobi and do them really well, as opposed to spreading out all over Kenya. Because, infrastructure and logistics costs go up exponentially as you think about larger areas, right? So when we originally started, when Myntra was, small relatively speaking, but when we had to scale, we would actually pick a city at a time and figure out how to actually create the infrastructure around that city and make it work. As opposed to trying to say, I want to build, when I left, we had 160, 180 warehouses, something like that, right? It was a $2 billion business. But every warehouse, every set of warehouses we built around a certain city, right? And so I don't know the exact details of how you would do it here, but I would think if infrastructure is a problem, pick a small area to focus and solve that problem first, right? Yep.
Think about, you've seen kind of Kenya and spoken to us roughly where we are versus where India is, and you have the ability to see where India was. If you were an investor, where would you put the money first? Is it consumer-facing businesses, or is it finance businesses, or is it, where would you?
I would say finance businesses. The reason is anytime when you have an $1,800 per economy going up, everything needs financing, right? And therefore, it's a relatively good business to put in, and it's best return on equity generally for finance businesses. And it looks like you have the digital infrastructure already built for financial payments. So building on top of that, building lending, building, I don't know, India gold loans took off, right? Bharat Pay got made. Now it's in trouble, but got essentially made because of gold loans, right? So if you can build on top of fintech infrastructure, that would be one. I think SaaS companies could be another interesting one in my mind because you can build for the globe. On consumer companies, the real question for me is, at least it looks like, for example, the largest part of e-commerce in India is fashion, apart from mobile phones. In units, it's fashion. But here it looks like there's a huge influx from China, right? Which is very hard to compete with. So again, my point is the where to play matters. Don't pick the hardest problem. It seems, pick the easier problem to solve, right? Life is about passion, of course, but it's also about picking your battles, right? You don't want to pick every battle where you get bloodied, right? So, pick the easy one and build there. And then you can go off from there, and then at some point, consumer brands will take off in Kenya, and then you can see.
Maybe as a final question.
Yeah.
You spoke about, sitting across the table without a PowerPoint.
Yep.
I wouldn't imagine a lot of you have had those kind of meetings when trying to raise funds. So the question I have is, there are people who get it, have played in this business for a long time. We sorely lack access to them.
Yeah.
Right? And having seen what you've seen now, what is kind of your commitment to bringing those kind of connections here?
Well done, Hassan. Well done. Very happy to be helpful. Look, I mean, one thing I was going to say is reputation is the only thing in life that compounds more than money. Right? It's important, right? And giving your investors a good exit, being fair to people, all of that matters, right? Again, it may seem very old-fashioned, but it's actually the biggest cornerstone of what an investor invests in. But the rest is Excel, right? And PowerPoint, which anybody can make up. So it's important. So I think reputation matters. Any help I can give to the ecosystem to connect you to investors, all of that, I'd be happy to do. And I think on doing the conversation without a pitch, I genuinely mean it. I think if you are not able to explain your business without a PowerPoint presentation and convince someone, that's a problem. And I think, I can say this after 15 years in consulting, my hands once used to shake when there was no PowerPoint. But actually, it's the wrong answer in many cases, because you have to be able to explain your business in a deeply passionate manner, in a way that you can explain and simplify it to somebody without a document. And I think it's important.
Can I ask a follow-up question?
Sure.
Because it goes back to the capitalized, uncapitalized thing, but you've got a team behind you, right?
Yeah.
And maybe those guys are having conversations with people with the team behind the guy you're chatting to and providing documents at that stage. I mean, have you built your organisation to a level of scale where I can understand if your campaign voice and your ability to explain things is important?
No, for sure, right? I mean, look, now we are at reasonable scale. So we have investor relations and we have people who talk to investors on a regular basis and so on, right? But I'm saying even early stage, eventually, what is the investor looking for? They're looking for a person they can bet on. I mean, that is the single largest thing that they look for, right? Because everything else around it can change, right? And I think that's really what you're looking for, right? I mean, you can have the team and all of the rest, but the reality is, it's a judgment call you make. I mean, one of the most defining conversations where I learned a lot is, I think, when the Flipkart sale to Walmart happened. Right? I mean, it's a $21 billion transaction. It's the largest transaction that Walmart has ever done, right? And we sat across from Doug, right? And he made the bet on Sachin and Billy. So, I mean, who the two founders of Flipkart, right? So, I think eventually it's about the person, right? Of course, the business needs to make sense. Of course, the economics need to be there. All of that storytelling needs to be there. But eventually, people write a check on a person.
And did you raise most of the early stage, sort of up to B, it was all done with your internal teams? Or were you
I haven't used a banker ever. I've done all my fundraisers on my own.
Okay.
So we've had 3, and all 3 have been done.
Yeah.
Just no banker, no anything. We've just had conversations, right? As I said, it does have to have a reputation. I mean, I had 2 successful exits earlier, and that helps, right? Of course, right? Because people have sort of made money, and once you make somebody money, then it's much easier for them to put the money back into you again, right? So that's a little bit of what happened with Axel and Norwest and so on, right? So.
But just to retell the story you told me earlier. The letter system.
Oh yeah.
Finding yourself.
Yeah. So after Myntra, I was trying to decide what to do before my entrepreneurial stint in sort of MedLife and putting the money in. So I said, what do I do with life, right? I had some money, to figure out what I wanted to do. So I actually said, I will talk to 100 interesting people globally. So I just made up a list and I wrote to people and said, can I come meet you? So we were chatting in the car on the way over. So I met, we were talking about Microsoft. So I went and I spent an hour and a half with Satya in Seattle. And I mean, he didn't know me from before. I just sort of wrote to him and he said, sure, here is the date that works. And I sort of flew over and did it. And I did the same with sort of various people. And I thought it was one of the most interesting learning experiences. So one theme also maybe to leave with all of you is learnability. And I think, as a founder, learnability is key because your problems keep changing and you keep learning on new things. So for me, I think talking to people has been always an interesting way to learn things, right? So I met, and it wasn't all business. I mean, I met the curator of the Museum of Modern Art in New York and so on. So it was like interesting set of people, but I met 100 interesting people and many of them, I mean, I wrote to 100, 70 said yes, all 100 replied to me, which I thought was interesting because, you don't think of that would be the response rate. And Has made an interesting point. Many people have never been written to. They think that people won't respond, so nobody ever writes to them, right? So right?
Just going on the learning theme. So, really appreciate that thought about writing for these guys. But yourself, what do you do to build, to keep on learning in terms of books?
Yeah. No, it's something I'm very passionate about. So it's a great question. Look, I've gone from auto to e-commerce to healthcare to fashion, beauty, and home. So it's been quite a. So I do 2-3 things. The first is the best way to sort of learn about something is actually to get involved in the business. So for example, if I want to learn a little bit about fintech, I find 3 or 4 small fintech companies. I may put in a little bit of money because it sort of increases involvement, and I go spend time with them. It's better than going to lots of classes because you just sort of immerse yourself in the business very quickly and you can learn, right? So that's one. Second is I try and talk to all people in the ecosystem. So for example, when I decided to do Myntra, I had no idea, right, between a knit and a woven, right? I mean, I was an auto guy. I mean, I could do the difference between a casting and a forging, but I can't do between knits and wovens. So I went and spent a week at NIFT, which is the National Institute of Fashion Technology. And again, just asked them, saying, can I come? And they'd sort of I spent a week, I just sat through some classes, I understood what fabric was, I then visited a bunch of mills. So you sort of understand the supply chain, right? So one way I think about it is supply chain. And with supply chain has 2 things, physical flow of goods and the flow of money. Where does money get made? So you try and sort of learn both, and then that's a good way to sort of do it. The third is I learn through reading, so I try and read a lot of books on topics that may or may not be of immediate interest, but I keep reading, and I think that also spurs something.
Yeah, I have a question around trust. I feel like one of the big problems that we face in Kenya around the e-commerce ecosystem is trust. And I don't know how India managed to, break through that habit, because right now we're dealing with, I run a digital agency, we're currently the e-commerce agency of the year, and dealing with different businesses that are handling e-commerce. One of the things that you see is that a lot of people can't be able to go past that. They want to see the physical good before they buy it.
Yeah.
So how did that
it's a great question. I think I would say Flipkart pioneered a lot of this. So the first cash on delivery globally happened with Flipkart, right? Because people wanted to sort of take the goods and do it. Second is in Myntra, I started something called Try and Buy, where you could order 3 different sizes, and they would try it out. It's like bringing the virtual trial room to your room, to your home. You try it out and then you return the other 2. There's a small fee associated with it. And so that actually helped because you can sort of touch and feel the goods. The third is, over time, I mean, I don't know how good the quality control processes are, but having very, very high standards of quality control, it matters. So in your warehouses and how you do e-commerce. In India, by the way, we have, in India, one of the things is when there is some form of, so we have lots of fake Nikes, right? So, one of the things we used to look for is why do fake Nikes get into Myntra? And the reason is people buy an original Nike and return a fake Nike, right? And there is no return QC process, right? And the guy who's picking it up is picking up a lot of things, right? So, So, for example, we had to make, one of the things that happens is India ethnic clothes spike at Diwali to December because it's wedding season plus this, right? So our returns also used to spike. We're wondering why. And what happens is people basically buy their clothes, put the label in, wear it to the wedding, and return it. So, we used to constantly look at data and figure out how do we start plugging these holes, right? Which is not easy to do, right? So on the trust side, for example, having inward QC, which is very good, really helps. It's a real investment, but we had inward QC so that you don't have fakes, right? You set your return policies right. So all of this over time, I mean, I don't think there's any easy way to do this, but I think over time, I think by category, there are different things. In fashion, by the way, usually the trust is whether it's a genuine brand and the nature of the fabric, right? It's, in the case of large appliances, it's usually installation. So whatever it is to build trust, you start to sort of build the associated services around it.
Yeah, and manage expectations.
And then manage expectations.
Sorry, can I just answer the question? Yeah. There's actually a startup, so yeah, which
put your money in escrow, they deliver the good, you deliver the good, and the money is released in 30 seconds.
There you go.
Yeah.
All right, then I think it's time to say thank you very much for this conversation. Thank you for being here with us, Ananth, and thanks for all the questions and the conversation. We really enjoyed it, and hope it was a help to all of you.
Great. Well, thank you.
Thank you.
Thank you. Really appreciate it.
So there's breakfast, right? So a chance to interact with Ananth a little more.
Yeah.
I think the kind of formalish
Yeah, yeah.
over. But as you've heard, Anand's an easygoing guy, so please, by all means, and Ananth, from all of us at Push, all the people here present today, really thank you. I know it's always tough. People at your level probably already find this work-life balance tough, but then to take some time away from your holiday and spend it with us, it's really special for all of us. So
I appreciate it, and I mean it. If I can be helpful in any way as you think about sort of things, let me know. Investor connects, whatever.
We will take full advantage.
Yeah.
Of this connection.
I love the name Push, by the way. It's great. Good.
Thank you. Please.
Thank you.